Tuesday. I'm usually a day behind. Welcome back to the live trading room. How's everyone doing? Today, Darren, I am recording the right screen. I made sure of it today. I am recording the right screen, so hopefully we won't have the same issue that we had yesterday when we had to use the in-house recording. But welcome back. Wonderful Wednesday. Little house cleaning today. It's going to be a little shorter session today. Probably going to run till about 9 o'clock. We had a family event pop up last minute, literally last night. My sister-in-law likes to schedule everything last minute. So I got to head out a little bit early. That way I can get everything up and to you guys before we have to head out. But it does bring up a great example. And I was thinking about this the other day. I did a podcast about it. If you don't follow the podcast, the Trading Coach podcast, check it out. Almost 700 episodes deep, ranked one of the best trading podcasts in the world. We're talking about the reason I got into trading in the first place. And the reason I got into trading in the first place was financial freedom, yes, but more importantly, freedom of time. I wanted the ability to kind of do what I want when I want it to, specifically with children. And I got young kids and I want to be able to see plays and see concerts and do trips with them. And well, one came up last minute, and this is a perfect example of me not needing to go ask my boss for a day off or needing to miss an event. I can just say, yes, son, I can make it. So a good example of that. That was my reason for getting into trading. And you guys all should have a why. That why could be different, but you should have a why. So we're going to get started here with the pound yen for today. Nothing really massive on the radar today as far as news events. Some Fed members did come out yesterday and say they put forth a more hawkish tone for the dollar. A united front in interest rate hikes. That's why you're seeing a little bit of, again, dollar strength, yen weakness. We're going to be playing this game back and forth until September. But let's look at the technicals. And pound yen is going to be a perfect example to start with because we spent a good time. Remember, Amanda had an idea yesterday. She wants to take a look at the pound yen. We looked at it from different perspectives, and when we got to the lower time frame, the 4-hour and the hourly, I mentioned that I cannot look for a buy on this pair. Now, does anybody remember why I was not able to look for a buy on this pair? On the 4-hour and hourly. Who remembers? Who remembers? Wasn't an entry reason, no. It was the fact that we had violated structure, right? You can actually see it right down here. We had violated a previous level of structure, right? The level of structure that we were waiting to hold on the daily, which ended up holding on the daily, but that's a different perspective. We had ended up violating a previous level of structure to the downside, and we're talking about the IPDE process, right? Identify, predict, decide, execute. And we're talking about them being kind of like doors of safety where you go through one, you can't get through to the execute door without going through the decision door. You can't get to the decision door without going through the prediction door. You can't go to the prediction door without going through the identify door. So they're kind of like little safety protocols to make sure you're consistent, make sure you're following plan. And we couldn't get past the identify and the predict. And so it wasn't a trading opportunity. And what's interesting is this. You come back today, right? And we were talking for a long period of time yesterday about how I can't look for longs. I can't look for longs. I can't look for longs. And look what happens in the market. What did the market do? Rallied, right? Rallied. Almost what, 300 pips? Almost 300 pips. Again, yen weakness brought to you by your dollar strength. And I always find these situations interesting because what is the first thing? Imagine you're someone in my shoes. What is the first thing that happens when you have this situation? What is the first thing you say? Do you sit back and say, man, glad I followed my rules Or do you say, boop, 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 right? Insert your curse words there. I should have been in that trade. Well, it's probably the latter, right? Most new traders probably say, man, I knew I should have gotten involved. My gut was telling me to get involved. Why did I follow that dumb plan? Why did I follow that rule? And then what happens next time you get a situation like this? Do you follow the rules? Or do you remember that pound yen trade where following the rules allowed you to miss out on 300 pips? Well, you probably remember that old trade, that last trade. And now you take it. And now you've developed this habit of breaking your rules, being reckless, and just doing whatever you want. And I can tell you from personal experience, as well as experience working with traders, it doesn't last. It doesn't last. But it's so hard. It's so hard because trading is interesting because in most other aspects of life, and Amanda said you were right. I was right, but I was wrong. Right? I was right, but I was wrong at the same time. And that's the interesting thing about trading. In most other aspects of life, it's easy to judge right or wrong by the result. Right? You get a math question, you get a math test, it's either right or wrong. You do your driver's test, it's either right or wrong. There are not many things in life where you could be right but still be wrong. Sports is one of them. And sports is directly related to trading. But trading is interesting because you can do everything right and still have a quote unquote wrong result. You can also do everything wrong and have a quote unquote right result, right? Because we don't have any control over an individual result. We never know, and this is important if you haven't heard this before, we never know, and we will never know the outcome of any given trade. Do you guys agree with that? Anybody disagree with that? We never know the outcome, and we never will know the outcome of any given trade. Because if we did, we would bet every single thing we had on that trade. Again, if I knew the outcome with 100% certainty, everything would be pushed onto the middle of the table. Everything. Kids, car, house, rental properties, someone else's kids, anything I can get my hands on because I know it's going to win. The edge that we have in trading, and the edge is what allows us to make profit, it comes from the full allotment of trades that we take over a blank period of time. So when we have an edge in trading, an edge doesn't mean that this particular trade is going to win, this particular trade is going to lose. It means that if I consistently follow this plan, the odds will work out in my favor. It is very similar to if we were going to do, and this is more risk reward related, but let's say if we were going to do a coin flip competition, and I made you the deal where every time it lands on heads, I'm going to give you $2. Every time it lands on tails, you're going to give me $1. Now, do you sit there and try to pick and choose which flips are going to land on heads and which flips are going to land on tails? Well, no, it's completely random, right? Theoretically, there should be a 50-50 result at the end of 100 flips, but every flip is actually random. So do you try to pick and guess which ones you're going to win and which ones you're going to lose? Or do you just say, hey, I'm going to sit here, flip it 100 times, and I'm going to go for whatever those results are because the odds are in your favor. Well, the odds are 50-50, but the risk reward is in your favor. When you win 2. When you lose 1. Trading is the same way. And that's why consistency is key. You're going to hear us talk about it so much where we just want to consistently execute the plan because we're going to go through phases where our strategy loses 10 times in a row. We're going to go through phases where our strategy wins 10 times in a row. And we never know when those wins or losses are coming. but all we want to do is take the trade. Now we do have another setting up here on pound yen that I do want to talk about. This will be more of a day trading opportunity. Euro yen has more, that's a swing trading opportunity. So we'll look at that next as well. But let me answer some of the questions that we came in. Cody says, like how you started with the kids. Yeah, you know how it is, Cody. When you have kids, that's the first thing you want out. I mean, I love my kids. For the record. For the record. Kamani asks Akil, why not look for sells on pound yen 4 hours since we have a break and close below structure? There's no real place to sell to. But you could look for sells, right? We talked about that yesterday with sells down on the 4 hour, right? There just wasn't a lot of expansion down to the downside that we were interested in. Like there's not much place to go, but you can certainly look for sells with the break and close below. Yeah. Certainly look for sells. Now, again, here's the higher time frame, and we're going to talk about this a little bit in training. But higher time frame, I'll get these VS1 levels out the way. What do we end up doing? And this is where time frames come into play, right? What time frame we're going to use for your analysis? What time frame we're going to use for your execution, right? We ended up holding on the higher time frame, so we actually ended up doing what we needed to do. That's why I was very safe to mention on the lower time frame. On the lower time frame, we broke and closed below, because we actually held and are putting in a nice reversal pattern right now on our higher time frame. But we'll get to that a little bit later. But real quick, this is high probability trades or what we want to take. The probability paradox, the outcome of every trade is random, but the outcome of a large sample size can be certain. Yep, yes it can. Like I mentioned yesterday, I pretty much know my return on investment every year. I pretty much know the range it's going to be in. I just have no idea how or when it's going to happen. That's what I tell people. So we got to hold here. We're going to start on the higher time frame daily chart. We've got to hold at our structure lows as expected. Very nice rejection candle. Just some quizzing again, right? What do we notice here? What's the story that this candle tells us, guys? Type it in. I mentioned this at the very end of yesterday's session. You guys need to make sure you're taking notes. Make sure that you're reviewing and ingraining it into your head. Someone on YouTube says, can you please use a light theme, please? Unfortunately, no. I'm sorry. The light theme bothers my eyes. The light theme bothers my eyes. And again, for you guys on YouTube, you should be here in the Bridging the Gap workshop. I don't know why you're watching on YouTube. We've got a free 2-week workshop going on. And you can be in here for the entire time and get a lot more training, but you're watching on YouTube. Come over. You're gonna waste the opportunity, right? So yeah, we see buying pressure. Correct. Yep, buying pressure, buying pressure, buying pressure. Right. Again, that candle tells us, and this was our lesson the other day, that just like the previous two candles looking left, sellers tried to push it down. At some point, they found buyers. Buyers had a much stronger reaction than the sellers. Now, when I say buyers and sellers, it's not necessarily two parties, because remember, sellers can become buyers as well. So when sellers are profit taking, they are buying because they have to buy themselves out of their sell position. So it's not necessarily kind of two different parties. It could be the same party as well, of sellers becoming buyers and then new buyers getting interested. So far, we're putting in a higher high, higher close. This is a very good combination called a 3-bar reversal. A very strong combination for a continuation. Now, the question we want to ask ourselves here at the pound yen is, if we are likely to continuate, there's that word again, where are we likely to continue to? Are you expecting a move all the way across the channel? We started at 7:30 New York time, so about 15 minutes ago. Are you expecting a move all the way across that channel, or are you expecting a smaller move? What would you guys say? Are you looking for price to come all the way back to the highs, or a smaller move? Orsi says a smaller move. Why do you say a smaller move, Orsi? And yes, this is live. Whoever asked that, we do the first trading idea of the day on YouTube called the Trade of the Day. Then I kicked them out. Yeah, good. So perfect observation. Again, and this is not necessarily reading a candlestick, which has kind of been our theme, but this is reading price. We pay attention to the this formation here, right? We essentially have equal lows, right? Nothing's going to be perfect in trading. But we essentially have equal lows. What are happening with our highs? Are they ascending or descending? Are our highs getting higher, or that's a tough one. Or are our highs getting lower? Man, try that real quick. Or are our, man, that's tough. I can barely talk how it is. That's a tough one. They're getting lower, right? So with our highs getting lower, right? Sticking to our theme of buying and selling pressure, right? Do we think there's more selling pressure or buying pressure at the top of this formation? Or are our? That's the tough one. More selling pressure, right? Yep, well done, well done. More selling pressure. So we want to be aware of that. So we don't necessarily see a clear path to create new structure highs. So when I see this, I want to look at this as more of a straight counter trend type of move, where I'm looking for a quick in and out type of move. Nothing across the entire range. Definitely nothing creating new highs. Real quick, Akil on YouTube says, my way to define a candle. Sorry, I am malfunctioning today, Charles. Akil, my way to define hammer candle is to pull a fib on the candle from wick to wick. If the body of the candle opens and closes within the 382, then that is my hammer candle. The name is irrelevant. Yep. Yeah, I'm with you. I don't really care about names. I spent a long time studying names, having little note cards like old school spelling tests and memorizing them. And then I woke up one day and I realized it's pointless. Who cares about what the name is? Maybe if you're a teacher, you're trying to tell somebody, you got to be able to explain it, but who cares about the name? All that matters is you know what it is and know what it means. Am I right? So many people get into debates over the internet about, oh, that's not a hammer, that's not, it doesn't matter. What does it mean? All that matters. So let's take a look down at the 240. We're going to bounce down to the hour because I'm already rambling a lot. And you can see a beautiful 3-bar reversal here. No way you could have traded after this because it sucked up the entirety of the move. And now we're starting to consolidate at a little area of consolidation in the past. We're going to go one more time frame down to the hourly because this is going to give us the best view, right? And the hourly chart gives us a very interesting formation. It is essentially the opposite. How do you access Bridging the Gap? www.tier1trading.com. That's how you access it. And just sign up. So this is exactly the opposite of what we're seeing here on, or what we were seeing on the daily chart, right? So what are we doing at the upper end with our highs? Are we putting in higher highs? Are we putting in lower highs? Are we putting in equal highs? How would you define this? Equal highs, right? What are we doing with our lows? Well, we're putting in higher lows. Small signs that, again, bears, each time the bears push down, they're gaining less and less space. Now, the bulls aren't necessarily allowing us to break out here, but they're holding their ground. They're able to create equal highs. And we're doing this at a key level of structure. Again, look left, structure leaves clues. We have a nice structure shelf right here. So we look at this formation right here, this pattern formation, and we can confidently say that if we break out from this level or of this level, right, then we're likely to go higher. Because all of the bears that keep trying to defend this level, where do you think their stop losses are at? Right above these highs. If those stop losses are taken out, what do you think is going to happen? We're going to see a break. right? Think about it like this, and I'll try to put this in the most simple way possible, right? Between buying and selling pressure, right? So we've got buyers that are trying to buy and push this up. This is a battle, right? We got buyers that are buying and trying to push this up. We've got sellers that are selling, trying to defend this level and ultimately push it down. So buyers are obviously using what type of orders if they're buying? Buy orders. Sellers are obviously using what type of order if they're selling? Sell orders. Now, when the sellers get defeated, right? If the sellers use protection, what type of orders are they using for a stop loss? What type of order are your sellers using as a stop loss? Their last line of defense. They're using buy orders, right? Buy stops. So if we're imagining and predicting that the sellers have their stop orders right above this level, and if the buyers can take out those stops, all of a sudden we go from having buy orders pushing it up and sell orders pushing it down to buy orders pushing it up. Not only no sell orders pushing it down, but also more buy orders here. Why? Because those sellers are now buyers. Does that make sense? And if we look at the market moving off of buying pressure versus selling pressure, it's pretty obvious to see that the buying pressure is going to outweigh the selling pressure. And that will result in price moving up. Now, there could be other sellers interested. Who knows at another part, but in theory, that's how it works. So if we can get past this level, we should see a break. So now the next question is this, right? All right, well, if we are going to break, right, we're still going through this IPDE process. I didn't walk you through, but this is still the IPDE process. We're identifying and we're predicting. The predicting process can sometimes get a little lengthy, especially when you're trying to explain it. Now the question is, okay, so we know that we're trading at a decision point. We're thinking to ourselves, if we break that decision point, then we're likely to go higher. We've come to that conclusion. So we've got our directional bias. The next question is, if we're likely to go higher, where are we likely to go higher to? Because that matters, right? There has to be room to take the trade. If there's only one pip available, then it could be an excellent trade setup, but there's no point in taking it. So where are we likely to go higher to? Our next level of structure, right? Now we know how to read structure. I can't remember if we did a lesson on that yet for bridging the gap. But if we didn't, you will learn how to restructure. But I always encourage you guys mark up your charts. Like literally take your lines and mark them up like that because it'll give you a nice visual of where these structure levels are at. And we can look at these zones right here, right? This is going to be a kill zone taken from our previous new structure low right here. You can see our VS1 on the inside as well to this level right here, right? This is the zone that we would expect price action to come to next, right? This is a counter trend move. This isn't a trend continuation move, right? We are violating a previous downtrend. So this is a counter trend move. So we have this big zone, right? Well, this doesn't really help. I mean, it helps a little bit, don't get me wrong. But now we want to pinpoint where in that zone can we look for, or can we make a prediction that price is likely to go to? And this is where we can use some of our tools. Becky, good job. Becky just wrote in almost 100 pip high, running Fibonacci on the structure, high to low, looking left. Yeah, let's bring a Fibonacci on. Let's bring a Fibonacci retracement from our, let me make sure I have the right high here. Yep. From our swing high to our swing low. Well done, Becky. Well, we got a 618 Fibonacci in that zone, right? 618 is the golden mean, 618 and 1618. What else can we bring in, guys? We did Fibonacci retracement. What else? Fibonacci extension. Let's go from our swing low, our most recent swing high, or swing here, swing low to swing high. and back down. We got a little confluence there, right? You guys see this area? Got a 618 retracement right here. We got a 127 retracement right here, all in this zone. We could do a Fibonacci inversion as well. That's correct, Dorsey. Not to confuse people too much. Don't worry about this, guys, if you're new and watching. But a Fibonacci inversion, you'll get a 618 in that same zone. So we've got a nice little fib cluster in this area. And if you want it to be a little bit more cautious because of the even handled number, talked about this yesterday, psychological numbers, just drop it down to 6350s. So now we know we have room from, what are we at? 62.66 to about 63.50s. You see how we're slowly breaking down this opportunity? Cody says, off to ride some bikes on the boardwalk. Must be nice, Cody. You prop firm traders, man, living the life. You traders just doing whatever you want, whenever you want. Some of us are in here working. You're out there just having fun, making money while you're riding bikes. I'm picturing Cody riding bikes on the boardwalk every once in a while, looking at his phone. It's been like, yes. Daddy, did you make money? Yes, I did. But how? You're not at work. I'll explain it to you later. That is really cool. I every once in a while I do that. My kids don't understand where it's like I'll look out, I'll check something, I'll get a little alert and be like, yes, trade hit. And I'll be like, they're like, Daddy, why are you smiling? Why are you so happy? Right? And they're like, just made some money. He's like, what? How? You're not in your office. And I'm like, they don't understand the concept yet. But I'm like, when you get older, you'll see. When you get older. But it is cool. So we got a nice little confluence area here. Nice little target area where you broke down using our technical tools where we can look for potential targets at, right? So now we know 163.50s or 162.65s and 163.50s. Now let's see how we can get involved. Now we can go through lower time frames for quickness purposes. I'm going to go down to a range bar chart real quick because this is going to give me a real clear look, right? This is going to be the same little structure shelf. You guys can see it, right? Just a little different look. We know the range bars are a little different, but you guys see the same thing we're looking at before. So I want to show you this. This is my favorite thing to do in day trade. I love the range bar chart. So we're looking for 163.50s. This is my ceiling where I'm expecting price action to go. I miss day trading, guys. I miss it. This is my range. What I'm locked in on as a day trader, I'm locked in from anything. As soon as we break our VS1 level, should have made it a different color. As soon as we violate our highs here, this horizontal line, any type of opportunity from here to here. Now, again, this will differ depending what type of trader you are, right? If you are a breakout trader, you have different opportunities. I am a pullback trader when it comes to my continuation trades. So what I need to happen is this: break and close above, pull back, look for opportunities. Break and close above, pull back, look for opportunities. Break and close above, pull back, look for opportunities, right? And I will stalk this until we reach our highs. Once we reach our high, then it's over. Right? The move has been made. We've come to our projection. My job, ideally, you get in on the first one and ride it all up, but it doesn't always happen that way. My job is to look for any opportunity I can to get involved in this move that I can ride up to 163.50s. Does that make sense, guys? We have lots of room. Oh, yeah. Yeah, lots of room. Yeah, plenty of room. You've got what, 90 pips or so? And from a day trading perspective, 90 pips that's an ocean. That is an ocean. Where would you put your stop loss? Would you use the ATR? Yeah, I would make no difference in using my stop loss. Stop loss would go 1 to 2 ATR below the entry, or below the swing point where the entry is included at. So let's say like this is the low of, let's say my entry is right here. This is the low of my entry, 1 to 2 ATR below that. Yep. So I won't know the exact point of the stop loss until we get the trade entry. But same thing we did yesterday on dollar Canada and Aussie dollar. Oh, Aussie dollar spanked me. Aussie dollar spanked me yesterday, guys. Took me right out. Took me right out. Didn't care. But yeah, I use ATR based stops. I use a 1 to 2 ATR range. That way it gives me a little bit of flexibility in case there's structure or an even handle number that I need to avoid. And now we're getting our break. So we got something similar on Euro Yen setting up. We're gonna visit that as well. And you can look at this. I like range bar charts, but you can look at this on different time frames as well. So you want to go down to a 15, probably a 5 will be your best, but you can look at this on a 15, a 5, a lower time frame as well. I like range bars because they give me a quicker view, and we'll see that as we continue to kind of stalk it. But a 5-minute, a 15-minute chart, whatever, a 10-minute chart, whatever lower time frame you use, you're going to get a similar look. All right. Any questions about pound yen? I want to move on to euro yen. Similar opportunity, but on a little bit of I think a little bit more room. But let me know if there's any questions about any about this trade or any of the concepts that we spoke about in here. That goes for you too as well, YouTubers. I see a few people typing. So we got our break and close above on a range bar chart. Boom. Now we look for our pullback. For me, higher high, higher close is the entry. If you're a breakout trader, you could be involved already. All right. Looks like there's no questions on this. I see a few people typing in, but all right, YouTubers, I'm going to shut you down. Hit that like button on the way out. Again, I'm glad you're joining us here on YouTube, but we have a free event. It is free. You can come in and stay for the entire time. So I want to keep pushing on that and pressing on that. You should be over in the actual live room for the full session. But I do appreciate you joining. Hit that like button on the way. If you have any comments or anything like that, leave it for me. Becky says, do you ever go market